Hello everyone, today we're going to be looking at the cash payments journal and cash receipts journal. Again, we have our key knowledge at the top that relates directly back to our study design. Okay, so the cash payments journal and the cash receipts journal are incredibly similar to the purchases journal and sales journal, and therefore I'm going to be going quite quickly through these. So if you have any questions, please don't hesitate to ask me in class. Okay, so we've got our cash payments journal to start off with. This is where similar cash payments are summarized and grouped together so that the recording process is more efficient. So this idea of efficiency is still rolling through these journals. We're trying to make it more efficient for reporting at the end of the month and more efficient for people in the business to get this stuff done. So while the sales journal and purchases journal are exactly the same transactions summarized, the cash payments journal is going to have multiple transactions. That's because the cash payments journal is summarizing all the payments that affect the bank. Not all payments that affect the bank or that go out of the bank. So they're going to have different debit entries, but all the same credit entry. So bank is always going to be credited because we're decreasing the amount of cash we have in the bank, but it's going to be credited as a result of a number of different debit entries. So this is an example. We've got our date, our details. Again, you've got to put in either the account name, or if it's a payment from a creditor, you'll put the actual name of the creditor. Our check number, which also don't forget everything goes down, all the explanations are down here as well. Our check number must run in sequence because we are issuing checks to pay for things. The bank is the total amount of money that is coming out of the bank. So the total amount of money that is coming out of the bank. Creditors control column is for the payments to creditors. So this is going to decrease the amount that we owe to creditors. This is for the cash purchase of stock. This is the payment of wages. Sundries is for any unusual transactions. So sundries is new from, there was no sundries in our purchases journal or sales journal. Sundries is going to be for any infrequent, irregular transactions. These ones here, the ones that have their own columns, are for frequent transactions that happen a lot in the business. Sundries is infrequent one-off transactions that may not happen every month or may only happen once a month. And then finally our GST column. So again, like I said, all that information is down here for you to read through. Check number, ensure reliability. So to make sure that we can match it back to the source documents. Classification columns for the frequent payments to be summarized, as I said before. It is important still. It is posted to the general ledger at the end of the month. So it's the end of the month that's really important. Whoops. So again, these totals down the bottom are posted at the end of the month. Sundries infrequent cash payments purchases are likely to occur, unlikely to occur more than once, and therefore don't get their own column. If they occur regularly in the business, you want them to have their own classification column. And then the GST. So again, we have a double checking mechanism. We add up all the classification columns, including sundries, and then that's our total debits for this, and that has to equal the amount that's going out of the bank. So we need to be able to double check to make sure that we've got everything recorded. If you do this at the end of every time you post a cash payments journal, you should ensure that you aren't missing anything. Okay, posting to the general ledger, very, very similar to when we were talking about the cash payments journal, the purchases journal and the sales journal. So I will run through this reasonably quickly. At the end of the month, again, please don't forget the month, not the period, the month. The total of each of the columns will get posted to the general ledger. The bank column will be posted to the credit side. It will be posted to the credit side because it is decreasing the amount of money that we have in the bank. And we're paying things out. Now, this is slightly different. The cross-reference in the bank will be cash payments. So it is not the name of an account. This is because all the debit entries that match this credit, entry, there are multiple of them. So if we were to try and do this here, we'd have to put creditors control, stock control, wages, etc., etc. So instead of doing that, we just summarize it with cash payments. So you can see here, 31st of January, cash payments, $15,057. If you go back up here, $15,057. So we're just posting out these totals to the accounts that they speak about in the heading of this cash payments journal. So this is our credit entry, then these are all our debit entries. Our debit side entries cross-reference is going to be back to the bank. These debit entries, the corresponding credit entry is bank for all of them, therefore bank is going to be the cross-reference. And we post each of them out. Please note that sundries is not an account. You post out each individual transaction to its particular account. So in here, we had the idea of electricity. So we paid electricity on the 10th of Jan for $150. That means it's not posted to the sundries account. It is posted to the electricity account. Sundries is not an account. Electricity, same deal with drawings. We've got our vehicle as well, and then our GST. Don't forget that within our cash payments journal, we are paying creditors back, so we will have to affect our creditor subsidiary ledger. Same approach as Chapter 5, the payments to the creditors were recorded in the subsidiary ledger, just as in Chapter 5 we increased the amount we owe to our creditors. Now we're going to be decreasing the amount we owe to our creditors. So it's recorded on the day the transaction occurs, always in the subsidiary ledger. This is not a month end, this is a day thing. Our cross-reference is the same as the cross-reference that will be used in the creditor's control account. So it's still going to be bank. It's just dividing up what's in that creditor's control account to all the individual creditors of this business. So this one only had two, 400 and 350 to A. Miller and Johnson. So if we go back up here, we've got A. Miller, 400, Johnson, 350. So we can see that it matches up perfectly here. 400 down, 350 down. And that's all for the cash payments journal. So now we're going to have a quick look at cash receipts journal. Again, I'm going to go through this very, very quickly because it is exactly the same as what we've been doing. So similar cash receipts are summarized together. So instead of cash payments before, we've got cash receipts. So money coming into the bank. That means that they all have one thing in common. They're going to affect the bank. The debit entry is bank. All the other ones are credit entries. So in this case, we've got our date on the day the transaction occurs. The details, so again, if it'll be the account, other than when it is posted to a, when we are receiving money from a debtor, it will be the name of the debtor. Our receipt number, again, because we're issuing it, it goes in order. We need to have the receipt number for reliability, so we know how to trace this back to source documents. The total amount of the bank, the total amount we're paying back creditors. Cost of sales is a little bit different, and I need to go through this in a little bit more detail. The idea of cost of sales is because we're making sales in this business, so cash sales in this business. So we know that for this cash sale here, we received $440 in total, or $400 for the sale. However, it's important that we always have down what our cost of sale was. But this does not have an effect on the bank at all. Cost of sales is increased and stock control is decreased. So this is our part of our full sales transaction, which will be down below. But all of these classification columns will not add together to equal the bank. You must take out cost of sales because this column doesn't affect the bank at all. So this is all here. Speaking about cost of sales, so our cost of sales goes up, we debit our cost of sales. Our stock control goes down because we're selling stock, so we need to get rid of that stock, so it will be credited. So it goes through in more detail here. The cost of sales does not have a debit entry to the bank, and it's a movement of stock, not cash. So please remember that. It's there to make sure that we remember that we need to do it, but it is not affecting the bank. Again, sundries is for infrequent items, and then 10% of the GST. Double checking mechanism. Same deal, please remember not to put in the cost of sales. It will not work if you include the cost of sales. That needs to be excluded because it is not a movement of cash. Same deal here. They're a little bit uneven for you, so just as I'm talking, I'll make them even. So these ones here are our different examples of what we have to post out. So we've got our debtors, sales, capital, GST clearing, and then our cost of sales. So two separate things are happening in the cash receipts journal, the bank and then the cost of sales and stock control. Please don't forget that. This is all then shown down here. Our bank column will have a debit side transaction because money is coming into the bank. This will include all of the money coming in, including GST. Just like we call them cash payments over here, we're going to call them cash payments on the cash receipts on the debit side, because this debit entry has many corresponding credit entries, so we couldn't possibly put them all here. So we just summarize it as cash receipts. The classification columns will be posted to the credit side. Their cross references will be bank. So we've got bank, 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 bank. But please note that this stock control and cost of sales still need to be included. So please don't forget that that is something that you have to post out at the end of the month, just as you do with your total amounts here. Very important. Also, don't forget, if anything ever happens with the debtors, just as with the creditors, it means that you have to affect the subsidiary ledger. So again, it's recorded on the day that the transaction occurs, and the cross-reference is the same that would be used in the in the debtors control account. So just describing what the credit is as a result of the debit, what the debit is as a result of the credit. So posting to the debit entry side because we are, the credit side, because we are decreasing the amount that these debtors owe us. They're paying us back, so we need to decrease it, so it goes on the credit side. And this will match directly back up to what's in the cash receipts journal. We have a look, G. Matthews and T. May. G. Matthews, T. May, G. Matthews. So those three transactions have been posted out to the individual debtors that are paying us back. All right, I'm going to pause this here and then I'm going to do another video about GST.